All right, time now for a power check. And today we are honing in on the energy sector and the recent outperformance that we have seen from some key names. Don't believe us? Well, in 2026 alone, we know the year is still early, but the energy sector is up 19% this year. That makes it the best performing sector in the S&P 500 by far, outpacing the broader index and pretty much every other sector group. So let's take a look at some of the names that are in the group that maybe should still be on your radar, even with these big gains. Rob Thummel is Senior Fund Manager at Tortoise Capital. Here now to break down some of his top picks. Rob, first off, energy macro. I mean, and it doesn't have to just be oil and gas. Wind is up, solar's up, everything's up. Are you surprised by the level of outperformance for oil and gas when you've got oil at 64, not at 104?
Well, not really, Brian. Thanks for having me. When you look at what's going on in energy, right, and what's happening, right, you're seeing a rotation. You're seeing a rotation out of the mega cap techs and into what really matters. You need hard assets that are really fueling the economy and driving the economy going forward. And what does that? It's energy, and that's at Tortoise. We've been saying that for decades now. And you've been following the energy sector for decades, and you know that we're in a new era, right? Electricity is now going to become the new oil, and AI is going to really be the future, and we're going to need secure energy, and the U.S. can produce that. And we're really excited about the opportunities across the entire energy sector as we move forward.
Okay, so let's talk about some of these names. All right, we're going to start off with ExxonMobil, biggest oil and gas company in the United States. Stock has just been absolutely on fire. It's up more than 20% in 1 year's time. In fact, if it was still in the Dow would be at something like 52,000 or whatever. What is it about Exxon that you like that investors seem to have just kind of recently discovered?
Free cash flow yield, Brian. I've been talking about this for a long time. The energy sector offers all investors free cash flow yield, and that's investors have finally decided we want free cash flow. We want free cash flow yield, and where do you get it? You get it in the energy sector. Exxon is a classic example. You mentioned it's the largest energy company in the world. It's got a free cash flow yield well above 5%. When all other sectors in the S&P 500 are below 3%. So you can get free cash flow, you can get stock buybacks, you can get dividends, you can get growth. And that's obviously something that we think is attractive to all not just energy investors, but all investors in aggregate.
Yeah, and let's talk about Williams Companies next, okay? Because what Williams Companies would not like me to say, but I'm going to say it, I know they're probably watching, is that this was a kind of a boring old pipeline company where they get tolls for the stuff you put in their pipeline, and that's still a huge part of their business. But they're also kind of quietly doing this behind-the-meter type data center stuff, supplying power directly like the veins or whatever you want to call it to the data centers. Huge opportunity for Williams.
Absolutely, Brian. You highlighted it, and we're excited about Williams, and it's one of our top holdings for that reason. Behind the meter power, a lot of people haven't heard about it, but it's really important, right? It keeps the retail electricity prices to all of us lower, right? Because who pays for the electricity? Well, it's the hyperscalers, and so what Williams is doing is using its massive pipeline network to basically generate electricity with natural gas that runs through its massive pipeline network that then is sold directly to the hyperscalers, and so that is a contract between Williams and the hyperscaler, and they're going to expand this dramatically, right? They just had an analyst day, and they're going to grow EBITDA 10% a year for the foreseeable future. The dividend will probably grow along with it, and so we see Williams as a really problem solver, basically, for this electricity demand that we're going to really be talking about for not only just for days and years, but probably for decades.